In 2024, Japan held over 1 trillion United States dollars in treasury bonds, making it the largest single foreign creditor of the American government on Earth. That number was not just a figure in a government ledger, it was a lever of immense financial power, and Tokyo was quietly beginning to question how to use it. Welcome to the secret treasury, where money, influence, and history intersect. Subscribe to trace the flow of power behind the headlines. The story of Japan and Bitcoin does not start in a crypto exchange or a digital wallet. It starts in a country forced to rebuild its entire economy from nothing after total destruction. When World War II ended in August 1945, Japan stood in ruins. City blocks were burned, harbor cranes sat still. The Japanese yen had nearly collapsed to zero value on world currency markets. American military officials arrived in Tokyo to oversee reconstruction, setting the terms for how Japan could trade, manufacture, and organize its entire post-war national economic life going forward. Over the next 4 decades, Japan rebuilt itself into the second largest economy on Earth, a transformation that stunned financial observers watching from offices in New York and Washington alike. Japanese cargo ships left Yokohama Harbor loaded with televisions, automobiles, and electronics bound for American stores, and the trade surplus between the two nations grew year after year. By the 1980s, Japanese corporations were purchasing iconic American real estate, including the Rockefeller Center in New York City, and alarmed headlines spread across the front pages of newspapers. Editorial pages in Washington warned that Japan was buying the United States one landmark at a time. Economists in government offices debated just how much quiet influence Tokyo had accumulated. Then something changed. In the early 1990s, the Japanese property and stock market bubble collapsed with startling speed, and real estate valuations across Tokyo fell sharply almost overnight. Japanese banks held enormous loan portfolios, backed by properties now worth far less than the loans themselves. Bank branches fell quiet across Japan as credit tightened and activity slowed sharply. Tokyo pushed interest rates towards zero in response, attempting to make borrowing cheap enough that businesses and households would resume spending and restart the stalled national economy. Economists labeled the difficult period that followed the lost decade. When another full decade passed with no real recovery, the term extended in economic textbooks to the lost 2 decades. Japanese households responded to prolonged economic uncertainty by saving at extremely high rates, placing money into government-backed postal savings accounts and safe bond instruments each year. The Japanese government issued vast quantities of national bonds to finance its spending programs, and Japanese institutions alongside ordinary households purchased hundreds of billions in those bonds. Japan also built a large foreign currency reserve, composed primarily of United States dollars, and those accumulated dollars were directed into purchases of the American government treasury bonds steadily. By holding American treasury bonds, Japan was effectively lending money to the United States federal government every year, building a financial relationship of deep and mutual global dependence. The United States needed foreign buyers of its bonds to keep the government funded. Japan needed somewhere safe to hold its dollars. Each country had become financially dependent on the other. This arrangement operated quietly beneath the surface of global finance for decades. Ships crossed the Pacific Ocean, money moved east and west, and the bond purchasing continued without interruption. Then March 2020 arrived, a global health crisis spread from city to city across entire continents. Governments locked down streets and shuttered businesses and restricted all movement rapidly. Central banks in Washington and other major financial capitals responded by expanding their balance sheets at a speed not seen since the years immediately following the Second World War. The Bank of Japan went further than most central banks, purchasing not only government bonds but also shares in stock index funds directly, making itself a dominant participant in its own markets. Inflation began rising sharply across the United States. The Federal Reserve in Washington started increasing interest rates aggressively in 2022, determined to bring rising prices under control. Higher American interest rates made newly issued treasury bonds more attractive to global buyers, but they reduced the market value of older treasury bonds sitting on the Japanese balance sheet. Japan held a vast portfolio of American bonds earning lower returns than newly issued bonds in the open market. It was not a crisis yet, but it was a growing concern that Tokyo economists tracked. Inside the Bank of Japan in central Tokyo, senior economists and policy officials studied updated figures and debated what a responsible path forward for Japanese National Reserve policy looked like. On the other side of the planet, a new kind of financial asset had been growing in size and gaining genuine institutional acceptance from professional money managers who had once ignored it completely. Bitcoin appeared in a white paper published in October 2008 by a developer using the name Satoshi Nakamoto. The first block of transactions was confirmed in January 2009 during a global banking crisis. The original document described a system for transferring financial value between two people directly, without any bank, any government, or any central institution needing to approve the transfer. For years after its launch, Bitcoin was dismissed by major financial institutions. Analysts inside Wall Street buildings called it purely speculative, unregulated, and lacking any real economic value. That dismissal began cracking in 2020. MicroStrategy, a publicly listed company based in Virginia, announced it would hold Bitcoin as its official and primary corporate treasury reserve asset. El Salvador made international news in September 2021 when its national legislature passed a historic law declaring Bitcoin legal tender across the country, the first sovereign nation to formally do so. Asset managers in New York began submitting formal applications to the United States Securities and Exchange Commission, seeking regulatory approval to launch publicly traded spot Bitcoin fund products. In January 2024, the Securities and Exchange Commission approved the first regulated spot Bitcoin exchange-traded funds in American history, and billions of institutional dollars entered the market immediately. The approval marked a clear turning point. Institutional investors who had watched Bitcoin from a cautious distance began moving capital into it through approved products on well-established national exchanges. Pension funds and university endowments that faced legal restrictions on direct crypto ownership could now gain Bitcoin exposure through approved exchange-traded fund structures on standard exchanges. The price of Bitcoin climbed significantly following the exchange-traded fund approvals in Washington. By late 2024, Bitcoin crossed the $100,000 per coin level for the very first time. Financial analysts at major banks who had once dismissed Bitcoin were now publishing formal research reports treating Bitcoin as a legitimate diversification instrument and a potential hedge against inflation. Japan watched all of these global developments from a uniquely significant vantage point. As a country managing trillions in reserves and fighting decades of stagnation, Bitcoin resonated differently in Tokyo. Japan had a specific and well-documented history with Bitcoin that separated it from other large economies. Tokyo was the city where one of the most damaging early Bitcoin failures had publicly taken place. In 2014, a Bitcoin exchange called Gox that had operated out of Tokyo announced that hundreds of thousands of Bitcoin belonging to registered customers had gone missing from the platform entirely. The Gox collapse sent shock through the early global Bitcoin community. Customers who had stored their coins on the platform watched helplessly as withdrawals were suspended and access disappeared. Japanese financial regulators in Tokyo responded by developing some of the most detailed cryptocurrency regulatory frameworks that any government had produced anywhere in the world at that specific time. The Financial Services Agency of Japan required cryptocurrency exchanges to formally register, maintain adequate capital reserves, segregate all customer funds, and accept regular professional audits. This strict regulatory framework produced an unexpected positive outcome for Japan. The country became home to some of the most professionally managed and legally compliant cryptocurrency businesses globally. Japanese retail investors developed a deep and early interest in cryptocurrency trading. By certain volume measurements, Japan ranked among the most active retail cryptocurrency trading populations on Earth. By 2025, discussions in Japanese government offices and major financial institutions had moved far beyond retail trading. Formal institutional and sovereign-level Bitcoin discussions had begun in earnest. At the center of institutional conversations about Bitcoin in Japan sat a company that was not a newly formed startup. It was Metaplanet, already listed on the main board of the Tokyo Stock Exchange. Metaplanet had previously operated as a struggling hospitality company, managing hotel properties across Japan. Its financial results were under persistent pressure, and most investors paid it little attention. Then the company made an announcement that immediately captured attention across Tokyo. In April 2024, Metaplanet declared it would begin purchasing Bitcoin as its primary treasury reserve asset. The announcement used language and strategic logic strikingly similar to what MicroStrategy had communicated to American markets years earlier. Bitcoin would become the central financial foundation of the company. Metaplanet began issuing bonds and new equity shares specifically to raise capital for Bitcoin purchases. The company placed buy orders on digital exchanges repeatedly, building Bitcoin holdings steadily each month. Investors on the Tokyo Stock Exchange responded with visible enthusiasm. Metaplanet shares climbed sharply as the market recognized the company as the first dedicated Bitcoin treasury vehicle in Japan. International investors seeking access to a Japan-listed Bitcoin treasury company found Metaplanet shares available through standard brokerage accounts connected to the Tokyo Stock Exchange worldwide. The company appointed Simon Gerovich as its chief executive officer, and he began speaking publicly and frequently about Bitcoin as a transformational financial technology with long-term global significance. Gerovich appeared at Bitcoin conferences in multiple countries, sat for journalist interviews across financial media outlets, and explained Metaplanet's strategy in language institutional investors could follow clearly. By early 2025, Metaplanet had accumulated thousands of Bitcoin on its corporate balance sheet. Each new purchase was disclosed in a formal press release, keeping the company visible in international financial media. Metaplanet set a public target of holding 10,000 Bitcoin by the end of 2025. That goal, announced from Tokyo in a formal company statement, drew attention from the global Bitcoin investment community. The broader Japanese financial establishment watched Metaplanet with a mixture of genuine curiosity and professional caution. Some institutional voices expressed visible interest. Others remained carefully skeptical. The Tokyo Stock Exchange operated with rules and disclosure requirements that made it relatively straightforward for a listed company to pursue an aggressive Bitcoin treasury accumulation strategy over time. The Nippon Individual Savings Account program allowed Japanese retail investors to hold Tokyo-listed shares, including Metaplanet Inside tax-advantaged accounts, connecting household savers to Bitcoin indirectly. While Metaplanet was accumulating Bitcoin on the exchange, the Japanese government was separately engaged in a broader institutional debate about the composition of its enormous national foreign currency reserves. Japan held approximately 1.1 trillion United States dollars in American Treasury bonds as of early 2025, making it the single largest foreign government holder of American sovereign debt anywhere. Some Japanese economists and elected parliamentarians began making public statements questioning whether holding such a massive concentration of American Treasury bonds still represented the best strategy forward. The argument was not that Japan would immediately liquidate its American bond holdings. The debate was whether future purchases should slow and whether serious diversification planning was now overdue. Even a modest and gradual shift in how Japan allocated its future reserve purchases would send measurable signals through global bond markets. Traders in New York and London monitored Japanese reserve data monthly. Bitcoin supporters active in Japan began presenting a specific argument to government officials and institutional investors about Bitcoin as a potential component of a future national reserve diversification plan. Unlike American Treasury bonds, Bitcoin had not been issued by any government and carried no counterparty risk connected to the fiscal or monetary decisions made inside any national capital or central bank. Unlike gold bars, stored in the secured basement vaults of bank buildings, Bitcoin could be transferred across international borders with no physical shipping, no insurance logistics, and no delays at all. The comparison to gold was deliberate and carefully made. Many nations, including Japan, already held gold in reserve precisely because gold existed outside the authority of any single government or central bank. Japan already held meaningful gold reserves alongside its massive foreign currency reserves. The conceptual step from treating gold as a reserve asset to treating Bitcoin similarly was now a subject of open dialogue. In 2025, elected members of the Japanese parliament, known as the National Diet, began raising formal and recorded questions about cryptocurrency policy during official legislative sessions with public transcripts. Members of the ruling Liberal Democratic Party submitted formal written questions to government ministers, asking for clear positions on the legal treatment of corporate Bitcoin holdings and applicable tax obligations. The Ministry of Finance of Japan, headquartered in the Kasumigaseki district of central Tokyo, was formally required to provide written parliamentary responses addressing questions about national reserve policy evolution. The Financial Services Agency published updated regulatory guidance for Japanese financial institutions that were exploring how to offer Bitcoin-related products and custody services to professional institutional clients. Japanese commercial banks and major securities firms began internal research programs on how they could legally structure Bitcoin custody accounts and regulated trading service offerings for their existing clients. SBI Holdings, one of the largest diversified financial groups in Japan, had already built cryptocurrency infrastructure and continued expanding its digital asset service offerings to meet growing institutional demand. Nomura Holdings, the largest Japanese investment bank, launched a regulated Bitcoin investment vehicle for institutional clients through its dedicated digital asset management subsidiary based in Tokyo, Japan. These moves by Japan's largest and most respected financial institutions made it clear that the Bitcoin conversation had migrated from the edges of finance into the senior boardrooms of the Tokyo establishment. The question in Japan was no longer whether major financial institutions would engage with Bitcoin. It had shifted entirely to how quickly, at what scale, and through which regulated structures they would act. Metaplanet served as a visible and continuously updated answer to part of that question. Each announced Bitcoin acquisition gave Japanese executives at other listed companies a public data point to study. The global Bitcoin community observed Japanese developments with heightened focus because of the enormous scale of capital that Japanese institutions and government reserve managers collectively held worldwide. If even a modest fraction of Japanese institutional capital moved toward Bitcoin over time, the impact on global market liquidity and price discovery would be visible and significant to market observers. The story of Japan and Bitcoin was not simply about one bold company or one government committee debating a new reserve asset category in meeting rooms inside the National Diet building in Tokyo, Japan. It was the story of a country that had spent 30 years searching for a way out of slow growth, persistent deflation, and a currency steadily losing ground against the strength of the United States dollar. Japan had deployed every conventional tool available to central banks and finance ministries. Every stimulus package and every rate reduction and every bond buying program had produced only limited results. Bitcoin offered something fundamentally different to a growing number of Japanese economists and financial professionals. It was not a government program. No policy committee could expand or reduce its total supply. The contrast with Japanese government bonds, which the Bank of Japan itself was purchasing in enormous quantities to suppress yields, was stark and was being raised directly by Bitcoin advocates in Tokyo. A country that had once been the most aggressive foreign buyer of American sovereign debt was now openly asking whether a mathematically fixed digital asset belonged inside the future of Japanese national finance. That question, spoken quietly in Diet committee rooms and loudly at Bitcoin conference stages across Tokyo, was already beginning to shape one of the most important financial conversations of the decade ahead. The question Japan was asking about Bitcoin was not being asked in isolation. Governments and institutions across the world were wrestling with the same fundamental debate at the same moment. Members of the United States Congress had introduced formal legislation in 2024 and 2025 to create clear legal frameworks for digital assets, including Bitcoin, inside the American financial system. The White House signaled a more open posture toward cryptocurrency by directing federal agencies to study the potential creation of a strategic national digital asset reserve for the United States. That executive direction sent a clear message to financial capitals around the world. If the largest economy on earth was reconsidering Bitcoin, every other nation had to take serious notice of it. In Tokyo, officials inside the Ministry of Finance tracked the Washington developments closely. They reviewed American legislative proposals and studied the implications for Japanese financial policy. The movement in Washington gave Japanese policymakers a political context that made their own Bitcoin discussions easier to hold. Japan was not leading this debate, it was joining a global one. Metaplanet was a visible signal of where Japanese corporate finance was moving. The company was also watching global regulatory developments very closely from its offices in Tokyo each day. Every time a major government made a statement about Bitcoin, Metaplanet executives in Tokyo gathered around screens and read the details carefully, looking for signals relevant to their own strategy. Simon Gerovich, speaking at a financial conference in Tokyo in early 2025, pointed to a global map of Bitcoin adoption and told his audience that Japan was one of the most consequential pieces on it. The reason Japan mattered so much in the global Bitcoin story was not just its reserves. It was the rare combination of regulatory maturity, institutional readiness, and capital depth found nowhere else. No other major economy had built a comprehensive cryptocurrency regulatory framework, an active retail trading population, and such a large institutional capital pool at the same time in its history. Japan had spent a decade building infrastructure for institutional Bitcoin adoption without intending to. The Gox disaster had forced regulatory maturity on the country far ahead of other nations. That regulatory maturity was now a competitive advantage. Japanese cryptocurrency exchanges had years of audited operations. Japanese institutions trusted the Bitcoin legal framework far more than most. In Seoul and Singapore and Hong Kong, regulators studied what Japan was doing with Bitcoin regulation and used it as a reference point for designing their own national digital asset frameworks. The story of Japan and Bitcoin was also deeply connected to what was happening to the Japanese yen on international currency markets throughout 2024 and well into the first months of 2025. The yen had weakened significantly against the United States dollar over several years. By mid-2024, it had fallen to levels not seen in decades, alarming Japanese households and corporations alike. A weaker yen meant the purchasing power of Japanese households was declining in international terms. The same yen could buy measurably less on global markets than it had just a few years prior. For Japanese investors holding assets in yen, the decline was a slow and steady erosion of real value. It created a powerful incentive to seek assets not tied to any single national currency. Bitcoin, issued by no government and denominated in no national currency, offered Japanese investors a way to hold value that no central bank printing decision in Tokyo could dilute or reduce. This argument resonated strongly with Japanese retail investors who had watched the yen lose value over years, while their savings sat in accounts earning almost nothing at all in annual interest. The combination of a weakening yen, near zero domestic savings rates, and a rising Bitcoin price created powerful conditions that accelerated Bitcoin interest among ordinary Japanese citizens. Japanese retail Bitcoin trading volumes had been significant for years, but by 2025 the profile of the Japanese Bitcoin buyer was visibly changing. Institutional money was beginning to move into the market. Japanese asset management firms began exploring Bitcoin fund products they could offer to institutional and high net worth clients through fully regulated account structures inside Japan. The conversations happening inside investment committee rooms of major Japanese financial institutions in 2025 would have been unrecognizable 5 years earlier. Bitcoin was now a serious agenda item. At the same time, a separate and equally important debate was unfolding about Bitcoin as a reserve asset at the national government level, distinct from any conversation about investment returns. The distinction mattered greatly. Investment products are about generating returns. Reserve assets are about storing national financial power across time, independent of any government decision. Gold was the clearest example of a sovereign reserve asset. Nations did not buy gold for annual dividends. They bought gold to hold stable value outside the reach of any currency system or policy. Japan understood this logic well because it had applied it for decades with gold. The Bank of Japan held gold bars in vaults for exactly this reason. Bitcoin advocates argued the same logic applied. The argument was precise. Bitcoin had a fixed maximum supply of 21 million coins that no government or central banking institution could ever change under any circumstance on Earth. Gold had a finite supply that governments could not create, but new gold could still be mined from the Earth. Bitcoin had a supply mathematically fixed forever at the moment of its original design. If Japan allocated even 1% of its foreign currency reserves into Bitcoin, the purchase would represent approximately 11 billion United States dollars entering the global Bitcoin market. An $11 billion purchase from one sovereign government would be a historic event for Bitcoin market depth and long-term institutional credibility among global financial institutions. No sovereign government had yet disclosed publicly that it held Bitcoin as a formal reserve asset in the same official category as gold or foreign currency. That disclosure had not been made anywhere, but in financial history, sovereign reserve decisions had often begun very quietly. Gold was accumulated for years before it was formally acknowledged as a reserve category by major world governments. The pattern of quiet accumulation, followed by public disclosure and then formal policy adoption, was one that Bitcoin analysts in Tokyo and other financial capitals were watching carefully in 2025. Metaplanet represented that pattern playing out at a corporate level. The company had accumulated Bitcoin before it became a major story. Sovereign behavior might one day follow a similar path. Inside the Japanese Diet building in central Tokyo, elected members of parliament continued submitting formal written questions to government ministers about Bitcoin throughout the first half of 2025. The questions became more specific over time. Early inquiries asked about the legal status of Bitcoin. Later questions asked about the feasibility of including digital assets in reserve planning. The evolution of those questions reflected how far the conversation had moved in Japanese financial circles. Bitcoin was no longer a novelty. It was being evaluated as a serious policy instrument. Meanwhile, the global accumulation of Bitcoin by publicly listed companies continued at a measurable pace. MicroStrategy in Virginia had accumulated over 500,000 Bitcoin by 2025. Other publicly listed companies in multiple countries had followed the MicroStrategy model and placed Bitcoin on their corporate balance sheets. Total institutional Bitcoin holdings grew each quarter. Metaplanet was the most visible Japanese expression of this global corporate Bitcoin treasury movement. But observers noted it would not remain the only Japanese listed company in that space for long. Other Japanese corporations sitting on large yen cash reserves were watching Metaplanet share performance closely. The Tokyo Stock Exchange listing gave executives a direct data point to evaluate. If Metaplanet kept accumulating Bitcoin and its share price reflected that strategy positively, other Japanese listed company boards would eventually begin asking themselves the same treasury questions. The potential for a broader wave of Japanese corporate Bitcoin adoption was one of the most closely watched possibilities in global Bitcoin markets throughout the first and second quarters of 2025. Japanese technology companies and electronics manufacturers sitting on large yen reserves had structural incentives to explore the Bitcoin treasury strategy that Metaplanet had pioneered on the exchange. The Japanese regulatory environment had become clear enough by 2025 that any listed company pursuing a Bitcoin treasury strategy knew exactly what disclosures it needed to make and what rules applied. That regulatory clarity was a powerful catalyst. Uncertainty is the enemy of institutional adoption. When institutions understand the rules, they can make a genuine and fully informed decision. Globally, the Bitcoin market was also undergoing a structural shift that made sovereign and institutional participation more plausible than it had been at any previous point in its short history. The 4-year Bitcoin halving cycle had reduced the rate at which new Bitcoin entered circulation. By April 2024, the amount of new Bitcoin created each day had been cut in half programmatically. This reduction in new supply, combined with growing institutional demand through exchange-traded funds and corporate treasury adoption, created market conditions analysts called historically rare. For Japan, the timing of its Bitcoin policy discussions coincided with a moment when the asset class was maturing in ways that made it more defensible as a serious institutional instrument. The volatility that had once made Bitcoin impossible to present in an investment committee was still present, but the liquidity and market depth of Bitcoin had grown substantially since the early years. By 2025, the Bitcoin market had enough depth that a sovereign government could theoretically accumulate a meaningful position without dramatically distorting the global market price in the process. This technical reality had not been true in earlier years. The Bitcoin market had been too small. By 2025, it was large enough that institutional scale entry was operationally feasible for the first time. All of these factors, regulatory maturity, corporate adoption, improving market depth, global sovereign interest, and the weakening yen were converging on Japan at exactly the same historical moment. The convergence was not accidental. It was the result of a decade of regulatory construction, retail market development, and years of watching the global Bitcoin ecosystem mature from Tokyo. Japan had been the most consequential country in early Bitcoin history that had never led Bitcoin adoption. That paradox was being resolved in boardrooms and committee rooms alike across Tokyo. The Gox disaster had scarred Japan early, but it had also forced Japan to build a robust regulatory framework that most other countries had not yet built around digital asset businesses. That framework was now the foundation on which institutional Bitcoin adoption in Japan could be built. The painful lessons of 2014 had quietly become the competitive infrastructure of 2025 and beyond. Metaplanet was accumulating Bitcoin. Major Japanese financial institutions were building Bitcoin offerings. Japanese parliamentarians were submitting formal Bitcoin policy questions in the Diet. The Financial Services Agency was issuing updated guidance. The Ministry of Finance was responding to formal inquiries. The Bank of Japan was being asked about digital asset reserve implications. Every institution that mattered in Japanese economic governance was now engaged with the Bitcoin question at some official level. That level of engagement had not existed 3 years before in Japan. The global Bitcoin community watched this institutional engagement with particular attention because Japan was not a small economy. What Japan decided would carry significant weight globally. If Japan moved toward formal institutional or sovereign Bitcoin adoption, it would not only affect the Bitcoin market, it would also give political cover to other nations considering the same move. Countries hesitant to engage with Bitcoin for fear of appearing unconventional would find the decision far easier if a group of 7 economies like Japan had already moved in that direction first. This dynamic, where the actions of one major economy unlock permission for others to follow, was a well-documented pattern in the history of global financial innovation and sovereign reserve policy. Japan had witnessed this from the other side before. When the United States and Europe began using quantitative easing after 2008, the Bank of Japan followed and eventually expanded far beyond them. The same pattern could apply to Bitcoin in reverse. A major economy moving toward Bitcoin reserve consideration would set off a chain of recalibration across financial capitals of the world. Japan was not operating in isolation. It was operating in a world where the United States was already discussing national Bitcoin reserves in congressional hearings and presidential executive directions. It was operating in a world where El Salvador had shown that a sovereign nation could adopt Bitcoin and continue functioning. Where exchange-traded funds had confirmed institutional demand was real. It was operating in a world where Bitcoin had crossed $100,000 and institutional analysts were publishing long-term projections that would have seemed impossible years before. All of this context surrounded Japan as it navigated its own Bitcoin debate in 2025 and gave additional weight to every conversation happening inside Tokyo financial and government buildings. Metaplanet stood as the most visible symbol of where that debate could lead for Japanese corporate finance. A once struggling hotel company had become a globally recognized Bitcoin treasury vehicle. Its Tokyo Stock Exchange shares had become a direct proxy for Japanese institutional Bitcoin sentiment. When Bitcoin rose globally, Metaplanet shares rose alongside it in visible and measurable terms. For investors around the world seeking exposure to Japanese institutional Bitcoin adoption, Metaplanet had become the most accessible instrument available on any regulated exchange inside Japan. But Metaplanet was always understood to be the beginning of a larger story. The company itself had made clear that it saw its role as clearing a path that others in Japan would eventually follow. Szymon Gierowicz had said publicly that Metaplanet intended to be to Japan what MicroStrategy had been to the United States. The ambition was to change how Japan thought about Bitcoin as a financial asset. Changing how a country thinks about money is not measured in months. It is measured in years, and in the slow accumulation of regulatory decisions, institutional precedents, and visible market outcomes. Japan was at an early stage of that process in 2025. The debate was active, the regulatory framework was established, the institutional interest was building, the corporate adoption had already begun. History had shown that countries moving earliest in moments of global financial transition tended to accumulate advantages that compounded significantly over the years and decades that followed entry. Japan had been a first mover in post-war manufacturing and built the trade surplus that funded its economic rise. Early movement in Bitcoin carried its own version of that same compounding logic. The fixed supply of Bitcoin meant that every coin purchased today could not be bought at the same price tomorrow. Institutions moving earlier would accumulate at prices unavailable to later arrivals. This scarcity dynamic was one of the most powerful arguments being presented to Japanese institutional decision makers in 2025. Time was a variable in the Bitcoin equation that could not be recovered, whether Japan moves quickly or slowly, whether the decision came at the corporate or the sovereign level, whether Metaplanet was joined by others, all of that still remained to be seen in time. But the direction of the conversation in Japan had become unmistakably clear. The question was no longer whether Japan had a relationship with Bitcoin. The question was how deep it would become. In the long arc of Japanese financial history, from post-war reconstruction to the bubble collapse to the lost decades, this moment in 2025 carried a feeling of genuine historical financial significance. Japan had always found ways to adapt to new economic realities. It had rebuilt from destruction. It had turned trade into power. It had survived its own bubble and kept its institutions firmly standing. Now, Japan stood at a different kind of threshold. Not a physical rebuilding, but a conceptual one. A moment when the definition of what counted as a store of national financial value was being renegotiated. Bitcoin was not a certainty for Japan. It was a serious question being asked in parliament buildings and bank boardrooms and exchange headquarters across Tokyo in real and recorded sessions. The answer Japan gave to that question would not just shape Japanese financial history. It would send signals to every major economy, watching from the sidelines and waiting to see what Japan decided. The Tokyo Stock Exchange would continue to track Metaplanet, the National Diet would continue receiving inquiries, the Ministry of Finance would continue issuing written responses to parliamentarians, and Bitcoin itself would continue doing what it had done since January 2009. It would confirm blocks, it would process transactions, and it would wait for Japan to reach its historic financial decision. The world was watching. The institutions were engaged. The regulatory frameworks were in place. The pioneer company was already accumulating on the Tokyo Stock Exchange in full public view each day. If this story moved you, hit subscribe button. The past holds powerful lessons, and I will help you uncover them.